Year. I want to bring in Rebecca Walser. And Rebecca, you and I both kind of chuckled a little bit at the San Francisco Fed's research. But, you know, who are we to criticize the San Francisco Fed? Go ahead.
You know, Cheryl, usually we're seeing, oil prices escalating when we're actually having a great global manufacturing is up, global orders are up, servicing, everything is coming down. Look at the S&P global numbers. We're seeing global orders and purchases. Everything's coming down. So it's interesting that we're at this peak oil usage. But, you know, I just was reading economic analysis that MBS really needs like $100 a barrel in order to support his economic projects. So I think that this is more about what Russia needs and what Saudi Arabia needs and not so much where the actual demand is. And it's going to create more inflationary pressure, obviously.
And Adam, that's the economic story here is that, you know, we used to look at core CPI, but not as intensely as we now look at headline CPI, because that is food and energy. And that is what Americans are seeing and feeling. They're showing us that in political polls. They're showing us that in their spending, which seems to be starting to kind of pull back a little bit. What do you say?
Yeah, absolutely. That's the real inflation, at least when you're at the pump or you're buying airline tickets. And we saw a huge surge in summer travel this year. That's been a big driver of crude oil. And this is not what the Fed wants to see as they try to tackle that inflation battle. So we'll continue to watch inflation. For now, it's trending in the right direction. I think with crude oil and this latest move, it does raise some risk about that trajectory of inflation coming down to the Fed's 2% target.
Sectors, as far as I'm assuming energy is something that's on your radar as well. You mentioned AI, which has been the performer of the year. If you're looking at different sectors to invest in, what do you say?
Yeah, AI has been the big theme, and it's been a big driver of this year's rally. However, when you look at valuations in that space, definitely stretched. So I think energy should be on investors' radar right now. We talked about how crude oil is breaking out. That's impacting the energy sector. And you can see that starting to do well. It's been a laggard for most of the year. We're starting to see an increase in relative strength, obviously with those commodity components doing well. Natural gas is also in that mix, I would consider. We're starting to see nat gas prices move higher off their lows. So we'd like the energy space into this fall. I think it's a potential area where investors could pick up some additional yield as well with the dividend yield and that adjustable dividend within the sector.
Adam Turnquist, Adam, thank you so much for being here. Appreciate it.